The 2024 tax season is here, and the Internal Revenue Service expects more than 128.7 million individual tax returns to be filed by April 1, which happens to be the tax deadline. So on Let's Talk this week, we'll be looking at what to expect regarding tax and all that it is. So welcome to Let's Talk. I am Uluja Kemosaku, and my guest is Mr. Kayode Agbabiaka, a seasoned tax professional of KWP Tax LLC, based in New York City. The topic again is 2024 tax season, what to expect. So please remember to subscribe to our YouTube channel and follow us on all of our social media platforms. Until then, please enjoy this ride with us. Thank you, Mr. Agbabiaka, for coming on the show. It's nice having you.
Thank you for having me. It's a pleasure being here.
Now, 2024 tax season is here. Now, can you please explain tax in its entirety?
Thank you for that wonderful introduction. And I think it's a good thing to begin by explaining to ourselves what taxes are and what they are used for so that we can have a better understanding. So the way I like to see it is that taxes are the rent that we pay to live in a civilized society. Think about it. Taxes is how the government is able to provide infrastructures. It's how they are able to provide services that we enjoy in this society. Think about payment to seniors, for example, Social Security. Think about basic service like the protection that we enjoy, the military. This is how government funds all of these programs. It is from tax revenue. It is also from that tax revenue that they're able to maintain the roads, build new roads, and do all of the things that we enjoy. So it is really not giving away money to the government. It is really providing for ourselves. So we'll do well to pay our taxes.
All right. So basically, you've mentioned the purpose of this tax as you explained it. Now, in looking at it, this is 2024. What is the new bracket for 2024 as compared to 2023?
So the tax bracket this year are a bit wider than they are in 2023. In 2023, I think for a single person, for example, your first $10,000 is taxed at 10%. But in 2024, your first $11,000 will be taxed at 10%, and it goes on and on. So this year, people would more of their income will be taxed at a lower level. So we do get some tax break in 2024.
So does that mean that the rules for filing tax in 2024 has improved, or are there rules at all?
No, the rules have not changed. The rules are still pretty much the same. Anyone, regardless of age or a place of residence, as long as you are a U.S. citizen or a green card holder, if you make the minimum amount that is required, you must file your taxes. And for this year, I think the minimum amount is $13,850 as an individual. If you're a married couple, if you make $27,700 and you are a U.S. citizen or a green card holder, it doesn't matter where you live, it doesn't matter how old you are, you must file U.S. tax returns.
Mm. Okay, while you made mention of green card holder citizen, what about those with tax identification number and those who do not have green card but are able to file tax? Now, how would you explain this? Is this applicable to them, or is there something else that they should be looking out for?
Very good follow-up. Sorry, I left those people out. As long as you live and work in the United States, for those people, they are liable for U.S. taxes and they must file as well.
Okay. Now, could you please explain the rules that we're talking about? Perhaps people don't know, perhaps a first timer, filing for the first time or, over time. So could you just give us a vivid or detailed explanation of the rules binding tax?
Thank you very much. So the rule basically is if you live and work in the United States or anywhere else in the world, and you are subject to US taxation as long as you as an individual, if you make 13,850 in 2023, you must file a tax return. And the period of filing is between January 29 and April 15. That's for wage earners. Now, for business people, if you do business and you make a minimum of $400 in profit, you are also liable for a US tax return. So you must be filing your tax return between April 29 and between January 29 and April 15.
Now, moving forward, for someone who is saying to his or herself, would I gain or lose? There's this issue of having to return to government, or refund to government. You will clear that for
Yes.
me when you're explaining it, because right now the return and refund is actually confusing me. Now, let me quickly ask you, with that, do you think that people, especially when it comes to child tax, which I would want you to also give an explanation of that, because I understand that people who do not even have children do everything possible to go adopt or just get a child somewhere so that they can get so much money. Now in 2024, how much should people like that expect? Will it be bigger or lesser?
Okay, so there's a lot of questions there. So let's start from the beginning. Let's make sure it's not a matter of choice. Like I said, if you meet the minimum requirements, meaning you make $13,850 or more in 2023, you do not have a choice. You must file a tax return. So whether you're getting a refund or you're not getting a refund does not dictate whether you file or not. You must file a tax return if you meet the filing threshold. Now, if you file, you are likely to get a refund or owe more money. And, you go from there. If you get a refund, good for you. If you owe more money, you have to pay what you owe in addition. If you don't have all of what you owe, you can make an arrangement with the government to pay what you owe over time. But the government, they frown at you not filing because you think you might owe or because you think you will not get a refund. That is a willful and reckless thing to do. And the government frowns at that very much. And if you are caught, there are penalties for that. So I would strongly advise, whether you think you're going to owe taxes or not, to still please file your tax return. And now speaking about people who have children, when you have children, you get what is called tax credit. Now, per child, if you're a single person and you make $200,000 or less, or if you're a family and you make less than 400,000 in household income, you get the tax credit. It's about $2,000 per child, meaning that if you have 4 kids, basically your tax credit is 2,000 times 4. Now that's $8,000. Now let's say you file your tax return and you owe 20,000. Now you have $8,000 in tax credit. So you use that to reduce your tax liability. So your tax liability just came down from 20,000 to 12,000 because you have 4 kids. And in some cases, when these credits are applied, some people have leftovers. So the government holds their money. Those are the people who get tax refunds. I hope I was able to explain all of that.
All right. Thank you so much for that. Let's quickly go on this break. We'll be right back. Welcome back. If you're just joining us, the program is Let's Talk on DNT Work. And I've been speaking with Mr. Kayode Agbabiaka. He is the CEO of KWP Tax LLC, New York City. And the topic has been 2024 tax season, what to expect. Now, thank you for standing by, Mr. Agbabiaka.
Thank you.
Now, what should we expect in 2024? Aside all that you've mentioned?
What we should expect is more enforcement. I mean, in the past, the IRS have been very relaxed regarding their rules because they did not, frankly speaking, didn't have the manpower to go after everyone for every tax infraction or those people who didn't file to go after them. But we all know that in 2023, the IRS got more money from Congress, more than they've gotten in recent times. And with this money, they've been able to hire a lot more people. So they have the manpower now to go after a lot more people who are not filing or people who are doing, things that are not, okay with their tax return. They have more power to audit now. So I would say expect more knocks on the door, expect more letters in the mail from the IRS if you are not doing everything that you should be doing with your taxes.
Okay, now aside the W-2 form, we also know that there is 1040. Now, what are those things that can be filed? The purchasing tax, is it also fileable?
Okay, so as an individual, if you live in the United States, you either make money one of a few ways. There are those who work for other people who make W-2 income, like we call them. You go to work for other people, they pay you either bi-weekly, monthly, or semi-annually. And then at the end of the year, you get a W-2. You must be filing with the amount that is on the W-2. Then there are other set of people who work for themselves. They have their own businesses. Those people, they make money and then they also have expenses. For example, let's take a self-employed person, maybe a laundromat owner. I mean, they make a lot of money from the clients who come in every day. They also have a lot of business expenses. For example, they pay for the shops, you pay utilities, they pay for a lot of other things. So at the end of the year, those people have to combine their income with their expenses, and whatever is left over, which is a profit, that's what they are taxed on. So those are the people that need to keep receipts, receipt of all of your expenses in the event that you are audited, so that you're able to defend those expenses to the IRS. So, and there are also other people, gig economy we are in these days. Everybody has a side hustle. There are those Uber drivers. There are people who are online making money, selling stuff on Amazon or eBay. Those people also need to keep track of their incomes and expenses. And those are the people who need to keep those receipts. But for W-2 people just go to work on a daily basis and get paid every month. There are really usually no receipts involved for those people.
Okay, thank you so much for that. Now,
Welcome.
it is a season, a very busy time for you. I want to believe that, I mean,
Yes.
this tax season is one of the times that you guys will be so busy.
Oh,
So
yes.
now, hey, what are you doing to ensure that your clients are well served, especially receiving a huge refund?
Interesting. Well, we're doing a lot. One of the first things we do is invest in ourselves. We try to educate ourselves. We try to keep abreast of all of the tax law, know what is going on, know how it affects our clients, and how they can take advantage of the new and latest things that is going on in the tax world, so that we can provide value to our clients. The other thing is we are also adapting with the times to better serve our client. We're investing in technology. With COVID, a lot of people prefer to stay at home to get things done. So there's no coming into the office. We're making sure that it's very convenient to serve people from the comfort of their home. We're doing Zoom meetings, a lot of that. We're investing in e-signature so that people don't have to come to our office to sign their tax return. We're putting out content on social media, educating people about tax laws and tax changes, and making tax education very simple, very attractive for people to digest. A lot of things, and we're also making ourselves available all year round for consultation. One of the things that I like, that I pride myself in, is my availability. A lot of people patronize big franchises like H&R Block, for example, and H&R Block is open maybe from January until April, and that's it. The offices are closed. And if you have any task questions after the office is closed, it's very difficult getting to talk to someone from H&R. But myself, and in my office, I operate an all year round office. So anytime, any day, my clients are able to reach me. So I make myself available. I go above and beyond to make sure that my clients are well taken care of. You're never left hanging, left to deal with the IRS yourself. Or if you get a correspondence from the IRS off season, we try to help you make sense of it and help you respond to the IRS. So these are some of the ways that we help our clients.
Okay. Now, thank you so much for that. This came to mind while you were talking. Perhaps some people have been, evading tax for a while. What is the penalty, the minimum penalty for this act?
I'm glad you brought that up because tax evasion is a serious thing, and especially when it is willful. When you're doing it intentionally, it's a very serious offense. I mean, it's a jailable offense. You can go to jail for it if you're caught. So, but the IRS, they know that there are a lot of people who have not filed taxes in a while, or who have not been filing taxes. Some of them may be willful, some of them may be ignorantly so. So they provide a backdoor for those people to come in. It's called the voluntary disclosure. So you have to come to the IRS yourself and voluntarily disclose that you haven't filed your taxes in 4, 5, 10, however many years. And when you do this, the IRS would allow you, let's say you haven't filed in the last 10 years, the IRS will say, okay, we'll make you go back 6 years, file the last 6 years return, pay what is owed, and you're good. Then don't do that continue filing going forward. We'll forgive every other thing, the 4 years that you didn't file. So, but if you don't come in voluntarily, if for any reason the IRS find out that you have not been filing and you have not been reporting and you're caught, there will be there's no arrangement, there's no forgiveness of anything. You will be made to face the full wrath of the law. You'll have to, they'll make you go back to all of those years. And so there's no leniency there. So if you know that you have not been doing the right thing, you have not been filing, you're better off coming forth, reporting yourself to the IRS, and getting some leniency.
Thank you for that. So for people listening, if you're a culprit, you need to work on it. Now, I want to believe that there were challenges last year because as I was reading the IRS website and they were talking about upgrading their system and all of those things that they are doing, all of the things that they are doing to ensure that this 2024 tax season is much more and better than it was last year. Now, what would you advise people differently to avoid any form of reoccurrence of whatever challenges that were faced last year?
Yeah, much of the challenges that were faced last year were really on the IRS side. For example, if you had to call the IRS for any reason, you may be on hold for hours, like I'm talking 2, 3, even 5 hours sometimes, because the IRS was not well staffed, and because there was COVID, and also the technology was outdated. But like I said, the IRS got a big boost in their funding in the year 2023. So this year they've been able to hire more staff, they've been able to upgrade their technology, so they have more bandwidth, so to speak, to respond to people. So this year, people can expect at least a lesser wait time on the phone to talk to the IRS, and they can expect a better turnaround. If you write to the IRS now, you might get a response within a very short time. So much of the improvement is really on the IRS side, and hopefully we would, as taxpayers, we would have a better experience this year.
All right. Thank you so much for that. Any final word as we round up?
Final words really to people who are living outside of the United States. You talked about people who have not filed for a long time. I think there's the notion. A lot of people think because they didn't live in the US, because they didn't make money in the US, they don't have to file US taxes. You have these people who have packed their bags and went to they packed their bag and went to different places. They live in Dubai, they live in Nigeria, they live in the UK now, but they're still a US citizen. They're still a green card holder. You still have a filing obligation every year. As long as you have that green card, as long as you have that US citizenship, you must be filing your US tax return. Now, this is what the US does. I mean, US is not unfair. If you, in the country where you live, if you pay taxes, when you file your US taxes, the US is going to give you a break for the taxes you pay in that country. So say, for example, a US citizen who lives in and make money in the UK. So you made 100,000. Let's say the UK tax rate is 8%, but then the US tax rate is 10%. Now you filed your tax return in the UK, you've paid your 8%. You still have to file in the US. Now in the US, you owe 10% on that income, but because you've paid 8% to the UK government, you only have to pay the difference of 2% to the US government. And for example, if the UK charges 8% and US taxes is 8%, you paid in full. You don't have to pay anymore, but you still have to file. So I speak to those people who might be watching. You are a US citizen, a green card holder, you live outside of the US, you still have a US tax return obligation. Please make sure you file your taxes and you stay out of trouble.
Thank you so much for this enlightenment. I really do appreciate your time. Thank you.
You're welcome.
And
Thank
to
you.
you out there, thank you too for being part of the show. I hope you've learned. If you have not been doing the right thing with your tax, I think it is the right time for you to actually do right by yourself. Until next time, when I come your way again with another exciting edition of Let's Talk, stay blessed and be happy. Bye for now.